Hello, everyone. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw a quiet day in the markets, but we did see some high flyers receive selling pressure, and small cap stocks really excelled and pushed higher on the charts. So let's get into the data. Let's check out the market summary page, and we can see what happened throughout the day. We've got the Dow Jones up 1.15%, Nasdaq down 0.77%. A lot of those high flyers were all in tech, and they were getting some selling pressure today. The S&P 500 basically flat, up 0.1%. U.S. oil up 1.11%. Gold up 1.06%, and Bitcoin is falling, now down 1.54% on the charts. So let's jump into the S&P 500 heat map. We see here on the charts, we've got Microsoft down, Meta down, much like I described, Nvidia down, AVGO down, Netflix, another high flyer defying gravity, is down 3.3%, Palantir down 4.13%, but we do see a lot of green in here. That's why the spiders are still staying moderately flat on the day, slightly green, because we did see a rotation of capital, folks. Everybody was chasing these high stocks, and now they're getting out of them, taking profits. And keep in mind, this is the 1st of July, right? And this is also the first part of the second half of the year. We just finished the first half of the year. Now it's time for those high flyer names, people in them, to take profits and find other opportunities to play. Next up, let's look at the S&P 500. So as we said, we didn't really have much movement today. Basically had a sideways day of price action, but that wasn't displayed on the big tech stocks. So right now today on the spiders, not much has changed. First area of minor support will be this previous all-time high right here, roughly at 61.47. If we do continue to push up on the spiders going into the holiday weekend, I'll be watching this inclining parallel channel for this trend line for resistance, currently right around 63.45. But if we start curling over and breaking through the recent all-time highs or the past all-time highs, the next area of support is going to coincide with this consolidation right here at 59.78 on the chart. Next up, we've got the Qs. The Qs, as you see here, started retreating just ever so slightly on the charts. Right now, this is looking like just a minor pullback day. We'll see if that excels into the weekend. If we do push up, though, this one trend line has not yet been tagged on the upside on the most recent price action. That trend line area is roughly about 557.84. But if selling pressure continues, which again, folks, let me remind you, we're overextended on the charts. Probabilities do dictate some sort of pullback, even in the Qs, even in the high flyers, because people are anxious to go ahead, take profits right there before all the tariff news gets settled out next week. First area of support on the Qs is 516.53. Followed by under $500 right down here at 494.72. Into the SMH. Now, the SMH, you see here, we did tag, but yet we're still maintaining this trend. And I'm talking about this inclining trend line right here. Incredible move on the SMH. Notice yesterday's price action as well as Friday's. We were very much near the all-time highs. We did not eclipse that feat, though. So that still can be done before we see a bigger sell-off. As we see on this chart, price is being saved, at least for today. We did it for a moment, trade underneath this trend line, but price still remains above that trend line. So until that changes, the area that we could be going for is a little bit higher on the chart, potentially in this small wedge area, right around $285 on the SMH. Next up, the IWM. Now, this was the recipient of some inflow of capital. We've been talking about this for the past couple of weeks. Once we noticed that price action broke out of this declining trend line, how price broke out, didn't even have the selling pressure to come down and retest this trend line. It still maintained strong and pushed higher on the charts. We didn't quite get up to the first resistance of 221 today. We'll see if that can be accomplished tomorrow. If so, next area of resistance is 229.30 on the small cap stocks. Into Bitcoin. Bitcoin, as we see, we're starting to see some selling pressure from this bullish consolidation. And I've highlighted this 50% area of the parallel for rejecting price. So far, that's happened on this recent attempt and move up higher. We're starting to catch a little bit of support right here where price currently is at Bitcoin because of this declining trend line, right around $105,400. We'll see if that holds leading into tomorrow. If not, the next support is very close too, right at 104,362. So we're just right in this area. Should be some decent support for Bitcoin in the most immediate near term with the selling emerging. Next up, we've got gold. Gold's had a nice, decent bounce. Yesterday, we discussed how price action got so close to this declining trend line on the parallel channel, but didn't quite hit it and bounced up and finished great for the day. Today, we're continuing that bounce up. Next area of resistance isn't that far away. It's just up here at 37.80, the bottom area of the pivots from the most recent high push that we had on gold. We'll see if we can tag that tomorrow. Next up, we've got silver. Silver here really remains strong. You can see here, even though we're starting to put in a little bit of a head and shoulders pattern on the chart, if I flip over to the weekly chart, look at this. This is just all bullish consolidation. Now, consider this, though. We do have wicks on either side. That does tell me there's a lot of sellers up here, but then there's equally amount of buyers down here pushing price to maintain right here in this horizontal line. Still, all in all, silver remains strong. Measured move target of 38.97 is on the radar with support at 34.86. Next up, U.S. oil. U.S. oil is forming a bear flag pattern just above support at $63.86. This weakens this support area. So even if we reach down, tag it, we're likely to start piercing this area and go down further on the charts with U.S. oil with this formation and pattern. Next area of major support I see on oil is going to be down here at $61.46. Next up, Nat Gas. Nat Gas had a decent sell-off again today, following up its selling pressure from yesterday. Notice today we pierced beneath this support area, $3.38, but since bounced right back up. So far, this support is holding strong. Next area of support, should selling emerge tomorrow, is going to be right down here at $3.13. Very nice recovery, though, today on the price for Nat Gas. Notice how we had a similar candle appear here. The following day, push price up higher. If we see a similar reaction, we should start seeing resistance on the Nat Gas chart right at $3.64. Next up, all right, so for some stocks that are starting to break out, look at Kraft Heinz. Kraft Heinz had a fantastic breakout from this declining trend line at the moment. If I scroll back out on the chart, you can almost see this isn't quite a parallel, but very similar to a parallel on the chart here with the lower trend line connecting pivot from all the way back in 2022 to 2023. That trend line is going to be our next area of contention on the chart for KFC. We'll see if this buying pressure continues and pushes price up into this area tomorrow at $27.32. I would not be interested in shorting here, though, folks. One thing to keep in mind, whenever you're trading stocks, you always want to put yourself in the highest probability situation. Whenever you have a chart like this with KHC that's so low on the charts and starting to make a move up, I'm not that anxious to start shorting it. We'll wait for an extended move to occur and then start shorting it. It very well could get rejected at this resistance line, but that's at least the first test for this stock for a move up higher. So let's move right back into KHC. You can see if we get through this trend line, this next area of resistance is going to be $28.46. Still implying a lot of room to run for this stock that has truly been just beaten up right here on the chart, all down near the lows on this daily chart. Next up, we've got MRK. Merck, and also Pfizer did start pushing higher today too. But notice this breakout that's occurring on this declining trend line. Also, we need to see tomorrow, will we have follow through? Will we have any sort of move above today's candle and confirm this breakout? If not, we're going to look like the MSTR chart and have a fake out breakout. We'll get into that in just a few moments. If it continues moving higher on MRK, first area of resistance to watch is 87.78. And then we have a big jump up to the next area of resistance. This is going to be more solid, right at 96.73. Notice how that connects all these pivots and basically this consolidation that occurred for a few months towards the end of last year. Next up, WYNN. WYNN also saw a big boost in its stock price today, mainly because data coming out of Macau and China was showing an inflow of customers, higher occupancy rates, etc., using their casinos over there. MGM was a recipient of some of this play too and did push higher as well. But first on WYNN, notice we broke through this area of resistance. Earlier in the day, this area was a big area of contention. Price consolidated right on this trend line. You can see right here, Price was just consolidating, 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 still looking like it's trying to break higher. And if it does, we'll be looking at this next trend line for the area of resistance. If it does hit it as early as tomorrow, we're talking about 106.76 on the chart, which would coincide roughly with this pivot high that occurred back here in October of 2024. Next up, MGM Grand. MGM Grand hasn't quite broken out of its declining trend that we see here on the chart, but it's very close to doing so. We have this declining trend line right here at 37.46. Be watching this area in the coming days to see if MGM can continue to push higher, break out, and start a new trend for a new direction moving up on the charts. Next up, into some stocks that started having outflow of capital after being such high runners. Now look at this stock. VRT moved up all the way 141% since the April lows. Very impressive move on this stock, but it's time to cool off. Notice this big red candle sell-off, and also notice where it happened. At the bottom portion of this inclining parallel channel. Almost can be predictable when you understand how to draw parallels, trend lines, and no technical analysis. Very nice pullback so far. First area of support on VRT is at 111.44. Next up, we've got GEV. Now, GEV has been a very curious company, especially because the new development of data centers for AI moving forward. They require so much electricity and power. An AI data center is almost equivalent to the power usage out of 100,000 houses. Just really let that sink in. So the demand for power is exponential right now with the build out of all these brand new data centers. Thus, the 100% move that we see here on the chart of GEV. I scroll back out, another parallel is emerged, and we see here that price tried to break out, never confirmed, and since has been rejected. But notice this wick. There's still a lot of buyers because the AI data center demand is expected to quadruple by the year 2030. That's not that far out. Just 5 years, we could have a quadrupling of data centers with AI capabilities. So GEV still certainly would be in demand for providing those electronic components. You can see here, any dip would be a potential buying opportunity for this new explosive growth. We do have first support area 466.62, the more conservative area 425.82. Notice how that likely will correspond with the 50% area of this parallel. Next up, MSTR. We reviewed this yesterday, but just notice breakout candle, now fake out, now sold off, did not confirm above this trend line. Not the time to buy when you see a breakout. Always be patient when investing. Make sure you get your confirmation signals. Make sure your trend lines and support areas are solid and play those for good profits. We see here price pulling back down on MSTR. Now, Bitcoin's also falling, but that's not pulling this back. This is mainly because of this trend line right here. Price could come back down to 333.14, which would be a good area of support for another attack of this declining trend line. Next up, Spotify. We see Spotify very similar to GEV, except for no massive wick down here at the bottom of the daily chart. That tells me we've got more selling pressure to come in the near future. First area of support is going to be right here at $680.82, which also corresponds with the 50% area of this inclining parallel channel that you see on the chart going all the way back to August and July of 2023. Next up, we've got Netflix. Another look at these patterns, folks. They're all about the same. Beautiful move up, big red candle selling off. This doesn't distort the chart, but it changes the chart. It's not necessarily completely damaging, but it changes the pattern because now this big red candle is in charge of price moving forward. So that likely would imply Netflix to come back down, even though this stock has had helium in it for quite some time. First area of support is going to be down here at $12.16.17. Last up, we've got Microsoft, another very similar pattern that we're seeing here on some of these high-flying stocks. Price action has now come down, not as big of a red candle that we've seen on some of these other charts. However, this big red candle does imply some more downside. First area of support at 485.03, followed by 468.35. Microsoft truly has been on an epic run when you compare it over to Google. And we'll just look at that real quick. Google way further down on the chart compared to MSFT. Really remarkable stuff in that push in Microsoft. It needs to cool down and likely come back in. All right, guys, that wraps up Trading to Close. Thank you guys so much for tuning in. We'll have more information, data for you tomorrow. Until then, enjoy some words from our sponsors. Have a great day, folks.
Hey guys, Lawton here with Verified Investing, and I am so excited to announce our brand new partnership with Kinesis. Kinesis is a revolutionary concept. They're able to create cryptocurrency that's tied directly to gold and silver in the form of KAU and KAG. You can send in your gold or silver and convert that directly into tradable currency. Another thing you can do is buy their gold. You can convert your US dollars or whatever currency you want into KAU and KAG. You can withdraw that and actually receive physical gold and physical silver. This is absolutely revolutionary. We know with how volatile everything is, it's important to have things grounded in silver and gold, and Kinesis is a great way to do that without the risk of having to go out and buy gold and silver bars yourself. They also have a trading platform directly linked with TradingView that I advise you all to check out. Thank you so much to Kinesis for sponsoring Verified Investing.